morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, lots to discuss this morning. We're going to get right into some chart action. We have the markets that initially were higher. Now they're starting to roll over. But I do want to caution everyone, Nvidia earnings tomorrow after the bell. That is going to be the key catalyst for the week. So without further delay, let's get right to it and go right into the action. So let's start off with the S&P 500. What's going on here? First things first, we see the markets are coming back down. This is all pre-market data right here. So you can see, again, yesterday we kind of closed right around this zone. We were chopping neutral in the after hours yesterday. This morning, markets began to float up a little bit and now have rolled over. And I think the key catalyst to this is just there's a little bit of nervousness, right? So you've seen the VIX be abnormally low for a long period of time. That's super, super unusual. It usually predates a big move in risk and fear. That's something that I'm concerned about. But also we're just seeing people probably getting nervous, like, what if Nvidia doesn't make this amazing report tomorrow? What if there's cracks? You almost get the sense that the markets overall are hinging. Whether or not we go to new all-time highs from here and higher is all about Nvidia now. And that honestly is the truth. It's a $2 trillion company. It's going to be a big player in these factors. All right. So again, S&P starting to inch down a little bit, not down much on the day. But let's jump over to the NASDAQ 100. The NASDAQ 100, if we jump to the intraday, same sort of deal here. If we zoom in, we can see yesterday was a nice up day on the NASDAQ 100. Again, initially we surged yesterday, then we went sideways the rest of the day. Now you can tell the pre-market and after hours, right? It gets really kind of tiny. Here's as we come into this morning, and then pre-market down we go. But again, if you look at where we closed yesterday, we closed right around here. You know, we're not that much lower here. We're down maybe a buck on the QQQ, maybe just a little over that. Now, looking at the bigger time frame, I was playing around with the bigger time frame on the NASDAQ, and I wanted to show you this, guys. If we zoom out on this chart, in fact, I'm going to go to the weekly so we can see this even better. And I love this stuff. I mean, this is literally the stuff that I love just scouting and finding because it does give me insights into the market. And so what we can see very clearly here is that we have this bigger parallel channel on the NASDAQ 100 that goes back to 2015. And if we take these lows from 2015, right, all through here, even the COVID low matches these lows, and we drag a parallel up, you can see that the NASDAQ 100 is right up in this upper range here. Now, according to past moves, as we saw, we generally get these big moves down off the high end of the channel and up off the low end, right? Up, up. So the idea is that we could be setting up for some sort of move down here in the near term on the NASDAQ 100. Whether or not that's on Nvidia, we'll have to see what the earnings are. The one thing that I would say is that with sentiment as bullish as it is, and again, the put-call ratio, which tells you how many calls are being bought to how many puts, it's way lopsided to the call side, which again is actually a bearish indicator. It means there's way too much money on one side of the market, especially when it comes to options. There's a tendency for the institutions. Remember, institutions sell a majority of those options to the public. And so they don't want to pay out all those options, right? They don't want to have to pay out all these retail investors. So when it gets so lopsided, there's a tendency for the market to go in the opposite direction so that the institutions don't pay out those call options. In fact, they expire worthless and the institution banks the premium. So just a couple little tidbits that I've discovered over the years of trading on what you want to pay attention to. Looking at the US dollar today, the US dollar is continuing to get a small bounce here on the daily chart. We had this rollover, then a little bit of a bounce, but again, let's be fair, this is looking more and more like a bearish consolidation from this down move. I still have a downside move on the US dollar to look at here, down to this 103 level. I talked about that yesterday. 10-year yield this morning, if we take a look, same sort of thing. There's your parallel channel. Here you could see again, every time you hit the low, you would bounce, except once you came down here, you bear flagged, which told us it was going to break down. I gave you guys that information. That's what has happened. Now we're doing a classic retrace to the scene of the crime before, in my opinion, the next rollover comes in, and my target is around 4.1% on the 10-year over the next, let's say, 2 to 4 weeks, right? So again, should play out over that period. All right, next chart. Let's go over some other ones. So some earnings results came out yesterday after the bell. Is anything moving? Is anything tradable? Let's take a look. Zoom reported earnings. They actually raised guidance on profit estimates as well as revenue, but their current quarter was a little bit weaker. The stock initially didn't know which way to go on earnings, and it has faded just a little bit. But I will say this, guys. This is one that I continue to love on a swing trade basis. Again, I've shown you guys this chart before, and to be honest, just the fact that they raised guidance, I wouldn't even be surprised if it goes green today. I would not be surprised if it goes green. Now, you look at this chart, and it has a wedge pattern, right? Classic wedge pattern. It's chopping between this line around 68 down to about 59. So that's about a 15% range. But the bigger thing comes in when you start looking at where the chart is in relation to its history. And I love zooming out on this because it's just so dramatic how you've had this big drop from the COVID moves and how their business is actually stabilizing, and actually they're raising guidance, yet it's still in this lower range. If you look at all of these stocks, let's go to SE. SE was a big runner during the 2020-2021 period, and you could even see that this one had a big drop, right? Big drop as well, but at least this one's had a pretty dramatic move off of the lows. In fact, from these lows, it's almost up 100%. Zoom is not. It's basically within 10-15% of its lows. And so, again, there's opportunity there, I think, especially if they're using AI to really enhance their Zoom functions on their platform. And they continue to have about $7 billion in cash that they have, which could be used for acquisitions, or someone, if I was a big company out there and I was saying, man, I'm looking for an acquisition that gives me a foothold and domination in the video conferencing area, they're trading at a $19 billion market cap with $7 billion in cash. It's an attractive potential buyout candidate. So just something to think about there. Palo Alto Networks reported earnings yesterday after the bell. Big drop on Palo Alto. Second earnings report in a row that caused a big drop. Not as big as last time, though. It has kind of floated up off of the lows. In terms of trading levels, I have two trading levels. They are still pretty far away, though. So we are trading currently around $300, so we're kind of right here. You can see we're right in this vicinity, right at this point here. This is where we're currently trading. You can see that off of the last earnings, we actually went all the way down here. Now, there's this little bit of an upsloping trend line, so that's really the big one. It's around 268. That would be a big support there. There's a little bit of a level slightly higher as well, but it's much higher risk. This is the big one. Could it flush down there today? Anything is possible, but I will say it's somewhat unlikely it gets down to that level because it's just not close enough pre-market just yet. It would take a big drop on the charts. Macy's reporting earnings. Macy's, again, a little bit of an uptick on earnings here, although not much. Looks like it closed yesterday around $19. It's trading at $19.68. So not a big move there overall, but nonetheless, it is catching a little bit of a bid. So something to keep an eye on that chart. Lowe's also reported here earnings, same sort of deal. They did very well on earnings. They talked more about how their bigger projects aren't selling as much, like to do bigger projects at Lowe's, but people are doing a lot of fix-its, like fix this, fix that, and that's really where they're excelling in the profit zone. So we did see this stock again close yesterday. It looks like around 229, 230. It's trading around 235. Again, percentage-wise, these are not big moves. So as a trader, I kind of say, you know what? On to the next one. Let's focus on the next one. All right, now I did want to go over a couple charts here. I do think that one chart going into earnings that is very intriguing to me on the short side is the chart of Costco. So Costco, guys, if we look at Costco, it has rallied up sharply here. I have multiple trend lines right in this vicinity. You can see, again, it has kind of coordinated. Look at these tails that are forming. I don't know if you guys can see because I'm zoomed out, but there's a bunch of tails of selling right at this $800 level. I do think that this is a very intriguing one. They report earnings on the 30th of May, so next week. But this one very much so could be a potential short off of these current levels with earnings. And we know, again, the consumer is starting to hurt. Now, granted, Costco seems to always do well, but at the same time, I think it's important to recognize that even a small slowdown in the consumer at Costco, that could be the difference on a bill of $20, $30, $40, $50, let's be fair, for as much as people spend at Costco. So I do think if there's a small slowdown in the consumer, then this may show up in the earnings or in the guidance that they give, and that's something to keep an eye on. Next chart I wanted to go over, let's take a quick look at Nvidia. Nvidia, last I checked, was flat to positive this morning. Looks like it's rolled over a little bit pre-market, so maybe it's down slightly, but again, not by much. And again, the kicker here is just going into earnings, we're at a very pivotal resistance level. Now, I want to be clear, just because we're at resistance doesn't mean we can't go up. If it gaps above this, then you're off to the races. You have a high level around 975, upsloping trend line. They're both converging in this zone right here. If we can open above that, then this easily gets above 1,000 on earnings. But again, right now, you got to respect resistance, and we are trading below resistance. So if I had to place odds on this, a slight favoring to downside probabilities, as long as into earnings we don't get above this level. If we get above, then it's a breakout going into earnings. As long as we stay below, it's not a huge probability factor to the downside. But again, I would favor the downside overall based on what the charts are showing me. All right, so that's some key little updates here. We're going to get into crypto, guys. I know Ethereum, wow, what a move yesterday on ETF speculation. Bitcoin had a big move up. I've been talking about how that was the likely move per the charts, so we'll get into that as well. Before we do that, though, as always, guys, I do want to do our spin. Remember, the Winning Trader Series won yesterday on the Wheel of Appreciation, so let's find out who gets to pick that up today for free. And again, Winning Trader Series, remember, 20 hours of everything I know in here, all my tactics, all my secrets, everything. And here we are, guys. Here's the winner at Blaw14, B-L-A-W 14. Congratulations, buddy. That's an amazing win right there. Reach out to Lawton at verifiedinvesting.com. All right. Let's come over here. We're going to spin the Wheel of Appreciation and find out what is the next one that we'll be giving away tomorrow. And don't forget, if you're a sponsor and you want to be on the Wheel of Appreciation, reach out to Lawton at Verified Investing as well. All right, there you go, guys. 3 months of smart money stocks and ETFs. We had 2 winners yesterday. Last week, we had a bunch of winners in there. These are swing trades. So again, you work 9 to 5. You get the alerts on your phone. It's awesome. Smart money stocks and ETFs. That's 3 months. That's a $450 value, as it's $150 a month. And literally, I'm doing 2 videos a day. I do a morning video before the market opens. I do a video at the end of the day, recapping all the secrets, all the knowledge of everything in that service. In addition, it's trade signals. Every time a trade signal hits, it's chart posts with levels. This honestly is amazing stuff. So we'll see who wins that tomorrow, but go check it out at verifiedinvesting.com. Now, next, we're going to take 30 seconds to thank iTrust Capital, one of our biggest sponsors here. There's a link below to iTrust Capital. You want to invest, I believe, in IRAs, doing crypto and so forth. iTrust is your place to be. So check them out, guys. We're going to take quick 30 seconds now.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
Back we go, guys. So let's get right into the chart of Bitcoin and look at that move yesterday. So listen, there were signs, right? So number one, we know our channels, or at least I hope we know our channels. Our channels that are downsloping, generally probabilities favor a breakout to the upside. An upsloping channel would favor a break to the downside. And if you recall, just when we were previously going over charts, we were looking at the upsloping channel that was on the 10-year yield. What did it do? It broke to the downside. So here's essentially the inverse of that, and that favored a break to the upside. So if we look at this, what did we have? We had the inverse head and shoulders, which is also a bullish pattern. Once we broke above the neckline, it signals a break of that pattern, which means it likely was going to head up. You take that channel and off to the races we go, trading at 71,000. Now, where's your next resistance? Simply put, about as easy to find as possible. You go to your all-time high right up in this range, and that, folks, is your level to watch. So basically just under 74,000. Now, if we can get through 74,000, then we'll start talking about higher targets, and I do have higher targets on Bitcoin. We'll just have to see if it gets through that 74,000 level. Now, let's talk Ethereum. So yesterday, Ethereum, basically the SEC asked for an update on some form. It's one of the forms for approval of ETFs for Ethereum from one of the players that had filed for it. And you can see very clearly, look at that move. So we had this wedge pattern, and again, classic wedge pattern. It held these lows recently. I remember talking about this, how it actually closed below the line down here one day, and I said to you guys, listen, there's no confirmation yet. It is not a confirmed breakdown. It could be a fake out. Well, guess what? I think we can all say that was a dang good fake out there if you got caught off guard. Hopefully you didn't. Hopefully you know the confirmation signal. Off to the races to the upside here. Where is your resistance level? Well, pretty easy to find as well. You're looking at around 4,100 right up here. That is your short-term resistance. Now, there are some other ancillary resistance levels, but generally at this point, the easy one to find is that 4,100 level on Ethereum. And again, the question I would have is, you have risk assets running right now. We have GameStop, the AMCs, the FFIEs, all of these crazy movers. It was almost a prime zone for crypto to make a run, right? Because it's risk on and crazy risk, like money just flowing in. And so part of me almost wants to be skeptical on that ETF news of saying, all right, like, does this actually pan out, or is this kind of like a fake out, if you will? But again, nonetheless, price is price, but it does make me think about potentially shorting it. All right, now I will say this. I still remember with you guys talking about being short Ethereum, and we got out right down here. We used this trend line to take profits on our short, and now that looks obviously very, very smart to do, and the potential to reload is right here. So again, that's smart money crypto. Speaking of smart money crypto, we did take a profit yesterday on INJ. I told you guys we were in this one a while back. It was a beauty, absolute beauty on this, and a nice almost 20% gain on INJ. Look at that move up yesterday. Incredible, about a 20% move as we saw that rip higher. Let's look at Solana here. This is a short that I just initiated with members just over the last couple days here. We look at this upsloping channel, or trend line, I should say, and this is what it is, folks. It's again, I want to be clear on this, is that I couldn't care less if Solana is up from here in a year, if it's up 500% in a year, or if it's down a huge amount in a year. Frankly, I don't care. All I know is that I just play the levels. So sometimes I'll go short, like on Solana here. Why? Well, because very simply, the chart told me to, right? Chart trend lines, right through here, right through here, right there. Okay, so that means short. It's just basically letting the chart tell me what to do. I don't tell the chart. I don't have any preconceived notions. Couldn't give a crap, frankly, about Solana one way or the other. I'm just going to trade it. And that's the beauty, and that's the freedom of being a swing trader, is that you look at these high probability opportunities. So yeah, we are in the money on this a little bit. Where would I look for a pullback? Honestly, probably right in this range, right? You have a pivot high with pivot high. So somewhere in the 155 range, pulls back there. We take a good 10% on this. We say thank you very much and move on, maybe even go long at that point. I don't know yet. But again, that is the beauty of it and what we do at Smart Money Crypto out there. So good chart there. Now let's talk gold and silver, guys. Gold, again, did get rejected off this topping tail high yesterday. It was above and made a new all-time high and got pushed back below. Remember, topping tails, they are bearish indicators and put in a top, which this was in the short term for a pullback, a decent pullback, about a $200 pullback. But the way you negate it, you have to have a daily close above that daily topping tail high. Yesterday we pierced it, we didn't close there. So this is still the dominant candle, and you have to respect it until it's negated. Now, if we close above it today, let's say we close right there, it's negated, and now you probably go on a run to 2,500 and change, which is ultimately, since the start of this year, by the way, when we were trading below 2,000, I said 2,500 we're going to by year end. Did I think it was going to be by the 6-month break? No, I didn't think so that fast, but I'll take it. Again, my gold holdings are thanking me for that. Next up, silver, a little bit of you can start to see there's a few sellers coming in here. That's what creates those tails on the top, but then buyers fighting on the bottom. So there's a little battle being waged here. Either way, you've confirmed above this level. So essentially, if we get a bullish pattern of consolidation back to 30, it becomes a buy opportunity. You'd have to respect that support. Remember, it's not about your preconceived notion of whether you like silver or you don't like silver. That doesn't matter to the charts. It's just letting the charts tell you. And right now, until proven otherwise, this is now confirmed support at $30. Natural gas, guys, we got to talk about this. So you can see, where did we yesterday talk about natural gas going? We said that likely it looked like it was going to go to the 618 Fibonacci level. Well, guess what? This was early in the day yesterday. We were still all the way down here. By the end of the day, and even in the overnight, we went right up to the 618. The 618 is this line right here, right, on the chart. And now it's being rejected off of that. Now, again, how much of a rejection is this going to be? It's hard to know, but I do like looking at the intraday. Like, look at this. This thing was trading pretty nicely pre-market, and again, pre-market for commodities doesn't really matter, right? There's no real open for commodities. But ultimately, look at that drop on the 10-minute chart. So this is now consolidating intraday bearishly. We'll see if it bounces up a little bit more. But ultimately, if this pattern continues, this would be an intraday bearish pattern, and we could see some more downside on the charts. All right, lastly, I just want to go over oil here. Oil maybe, and I say maybe because this isn't a confirmed breakdown yet, but we do have our bearish pattern, right? We just look at classic bear flags. There's your drop. This is all sideways consolidation or digestion. We're starting to move down here, but again, it is unconfirmed. I still think eventually this pattern, again, if you just look at this pattern and you look 100 of these patterns, what type of pattern is it? It's bear flag. Out of 100, probably about 75 would break lower. So that's what we do here at Verified Investing. It's not about our personal preference. It's not about our personal feelings or whether we like oil or whatever, or what we, political affiliation. It doesn't matter. Any of that is nonsense. When you want to make money in markets, you stay literally, all that matters is the chart. And the chart, you go with probabilities. And remember, even when you have 75% probability, it still means 25% of the time you are going to be wrong. And so you have to understand that and be ready for those scenarios. And again, so it's not about going all in on any one trade, because you don't want to risk blowing your account up on the 25% chance that you're going to be wrong. These are really important lessons, folks, that we talk about. So on that note, I did want to just mention, guys, make sure to comment and share this stream. That's how you get entered into winning what's on the wheel of appreciation. You also have to follow Verified Investing on YouTube or on Twitter. As long as you do those two things, you'll be entered to win the Smart Money 3-month Smart Money stocks and ETFs, 3 months of that access, $450 worth. And then lastly, in a few minutes, we're going to go live from the trading floor. So make sure to tune in for that. It should be fun. We don't know if there's going to be any trades. We don't know ahead of time. But if there are, it'll be fun for you guys to see live from the trading floor what goes on there. You guys have a great rest of your day. Thank you so much for being supporters of Verified Investing. We love you all here. And again, I'll see you soon. Take care.